In this video, you'll learn about the balance sheet. Let's run through the format of a balance sheet. First, you have the non-current assets. Non-current assets include the fixed assets and the financial assets. Next, you'll have the current assets section. Current assets are short-term assets like inventory, trade and other receivables, and cash plus cash equivalents. When you add the three amounts for inventory, receivables, and cash, you get the total amount for current assets. When you add your non-current assets plus your current assets, you will get the total assets amount. Any adjustments that involve an asset will be recorded in this section of the balance sheet. For example, if there is an adjustment for inventory, then the adjustment will be reflected by the inventory line under the current assets. Now we can move on to the equity and liabilities section of the balance sheet. First, you have the shareholders' equity section. Under shareholders' equity, you have the ordinary share capital line. This line shows the value of the shares issued. And then you also have the retained income line, which shows the value of the accumulated profits of the business. After the equity section, you have the non-current liabilities section. This is where you record all the long-term debts of the business. Finally, you have the current liabilities section. The current liability section is made up of trade and payables, which are the things like creditors and other small debts, the bank overdraft, and any short-term loans. When you add these three amounts, you will get the total amount of current liabilities. When you add the shareholders' equity, the non-current liabilities, and the current liabilities, you will get the total equity and liabilities. Any adjustments that involve equity or liabilities will be recorded in this section of the balance sheet. For example, if there is an adjustment for creditors, then the adjustment will be reflected by the trade and payables line under the current liabilities.